Good morning, I'm Maiki Oreta and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. Okay, first let's recap how global financial markets performed last week on Wall Street. Stocks closed lower after Federal Reserve Chair Jerome Powell signaled a slower pace of interest rate cuts. He cited continued economic growth, a strong job market, and inflation still above the Fed's 2% target. Traders are now pricing in a 42% chance that the Fed will keep rates unchanged next month, up from about 14% just a month ago.
The market sell-off was really, I think, driven by a little exhaustion post-election. We'd had such a great run after the election. We've had kind of benign, decent economic data in the last couple of days, and then we got some news from Chair Powell. Here's some comments from Chair Powell that he doesn't need to be in a rush to trim interest rates, and I think the market is just at this point taking a breather. And what we're seeing is what have been the strongest names are finally starting to take a bit of a pause and get into a correction. So I'm not sure it says anything new about the forward view for the markets, but for now it looks like we're in pause mode.
Markets also closed lower on Friday as investors digested Powell's hawkish comments. Also in focus, fresh third-quarter GDP data from the UK came in at just 0.1%. This is below the expected 0.2% growth and a sharp drop from the 0.5% expansion in the second quarter. Here in the Asia-Pacific, stocks are mostly trading lower ahead of what is regarded as a quiet week for economic data in the region. South Korea's Kospi, however, is bucking the trend, opening about 2% higher. And in the commodities market, Brent crude is down 0.5%, trading at $71 a barrel. Gold, meanwhile, is up by 0.4% at $2,573 per troy ounce. Here's a look at the week ahead for financial markets. America's earnings season is winding down, but we're still expecting key third-quarter results from chipmaker NVIDIA this Wednesday, U.S. time. NVIDIA's chips are considered the gold standard in the artificial intelligence space, and the company has seen its share soar nearly 200% this year, a huge gain that has allowed it to overtake Apple as the world's most valuable company. Now, this week, we'll also get rate decisions from several countries. On Wednesday, Indonesia will announce its decision, followed by Turkey and South Africa on Thursday. On November 22nd, Germany will release its third-quarter GDP data. This will provide further insight into the health of the German economy and whether the European Central Bank might cut interest rates next month. Investor confidence in Germany remains gloomy, and traders are now estimating a 1 in 5 chance of a rate cut. And on Friday, we'll get a further update on the global economy through purchasing managers' indices from Europe and the United States. Data from these countries is expected to confirm that global manufacturing activity remains in a downturn, while the services sector continues to show strength. On another front, now on the radar this week, we also have the two-day summit of the leaders of the world's 20 major economies. As with past gatherings, this year's G20 summit in Brazil is expected to cover a wide range of issues, from combating poverty and hunger to reforming global institutions. But likely taking center stage will be the critical issue of global warming. The G20 meeting, which begins today, coincides with the COP29 UN summit in Azerbaijan, where negotiators have yet to break a deadlock over climate finance. UN Secretary General Antonio Guterres stresses that while all countries must play their part, the G20 must take the lead in efforts to reduce greenhouse gas emissions. The G20 countries represent 85% of the world's economy, and they are the largest contributors to multilateral development banks that help drive climate finance.
And I have come to Rio with a simple message. G20 leaders must lead. And G20 countries, by definition, have tremendous economic clout and they yield massive diplomatic leverage. They must use it to tackle key global problems.
Chinese President Xi Jinping and his outgoing U.S. counterpart Joe Biden hold their final meeting. The two leaders met for about 2 hours on the sidelines of the Asia-Pacific Economic Cooperation, or APEC, summit in Lima, Peru. Biden and Xi acknowledged their differences but emphasized the need to maintain U.S. and China ties. Xi also vows to work with the incoming administration of Donald Trump.
拓展合作，管控分歧。
China-U.S. relations have gone through ups and downs, but under the joint stewardship, the two sides have also been engaged in fruitful dialogue and cooperation, and the relationship has been kept stable on the whole. When the two countries treat each other as partners and friends, seek common ground while shelving differences and help each other succeed, our relationship would make considerable progress. But if they take each other as rival or adversary, pursue vicious competition and seek to hurt each other, we would roil the relationship or even set it back.
We haven't always agreed, but our conversations have always been candid and always been frank. We have never kidded one another. We've been level with one another. I think that's vital. These conversations prevent miscalculations, and they ensure the competition between our two countries will not veer into conflict. Be competition, not conflict. That's our responsibility to our people, and as you indicated, to the people around the world. We are the most important alliance or most important relationship in the entire world. And how we get along together is going to impact the rest of the world. And so, our two countries cannot let any of this competition veer into conflict.
The talks came 2 months before Trump assumes office. The president-elect has threatened to slap tariffs on up to 60% on U.S. imports of Chinese goods as part of his protectionist trade policies. Now, the ASEAN Plus 3 group currently warns of financial stability risks due to its heavy reliance on the U.S. dollar. According to the ASEAN Plus 3 Macroeconomic Research Office, over 80% of trade invoices in the region are in U.S. dollars, and more than half of banks' cross-border assets and liabilities are dollar-denominated. AMRO points out that this dependency exposes the region to funding stress, particularly during times of high market volatility or expectations of currency depreciation. As pressure builds, borrowing costs increase, access to funding becomes limited, and foreign exchange hedging becomes more restricted. AMRO suggests that boosting the use of local currencies in regional trade and financial transactions could help mitigate these challenges from external shocks. For the Philippines, which relies heavily on remittances and foreign investment, this shift could provide a buffer against the impacts of dollar strength and global market fluctuations, potentially stabilizing economic conditions in times of global uncertainty. Now, the Philippines' external debt service burden currently falls as of end August. Debt servicing on external borrowings dropped by 3.8% year on year, reaching $8.68 billion US dollars. This decrease was mainly due to a significant drop in principal debt payments, which fell 23%. In contrast, interest payments increased by 16%, rising to $5.22 billion over the same period. Principal debt payments are mostly associated with medium to long-term fixed obligations, while interest payments include both short-term revolving credit lines and fixed-rate loans from banks and non-bank institutions. For the Philippines, this decrease in principal payments provides some relief to government finances, freeing up resources that could be allocated to other priorities, such as infrastructure or social programs. However, the increase in interest payments reflects ongoing pressure from external factors, including global interest rate trends. Now, the country's banks can now begin interest rate swap transactions starting today. The Bankers Association of the Philippines has launched an enhanced peso interest rate swap market aimed at improving loan pricing and boosting liquidity. This initiative is supported by 16 market-making banks, including BDO, BPI, Citibank, and JP Morgan Chase. 5 banks will also serve as regular market participants, including BDO Private Bank and Maybank Philippines. The peso IRS market will operate on the Bloomberg platform. This move is expected to strengthen local yield curves and improve the pricing of short-term credit instruments. This development is a significant step towards enhancing the country's financial market infrastructure. It also provides banks with more tools to manage interest rate risks, makes loan terms more predictable, and should improve access to credit, particularly for businesses and consumers. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Right now, 9:44 this morning, the PSE index is up by 0.4%, back at the 6,700 level to 6,706. This comes after 4 weeks of losses following Trump's election victory in the United States. For the week, analysts say they expect the market to trade sideways, possibly with an upward bias on bargain hunting. And that's what we're seeing right now early into the session. The All Shares Index is up as well, up by as much as the PSE Index, up by 0.4% to 3786. Now, of all the sub-indices, we're seeing a mixed picture. The holding firm, services and mining and oil and property counters are in the green, sharply in the green for the morning, whereas the financials and industrial counters are trading sideways with a downward bias right now. Now, at the foreign exchange market, the peso opened stronger against the dollar. It opened at 58.67 compared to its previous close of 58.73. Now, joining us today from Singapore is Wei Zhou, the CEO of Coins.ph, one of the leading crypto platforms in the Philippines, with cryptocurrency prices surging and Bitcoin hitting an all-time high of $91,000 rather, following the return of Donald Trump to the White House. Wei is here to help us understand what this means for the global crypto market and its impact on the Philippines. Hi, Wei. Thank you for being here with us this morning.
Hi, thank you for having me.
Okay, Wei, interesting times for crypto, especially with the U.S. taking on a leadership role in this space. Since the election of pro-crypto president in the U.S., how has the global appetite for cryptocurrencies in general changed? I know Bitcoin is up for the year 112%. How has it changed from your perspective?
Yeah, I think that what has happened since the election of Donald Trump as the president, I think, has driven not just a tremendous interest in crypto and Bitcoin specifically from outside of the cryptocurrency industry, but I think it has also instilled people within the industry a new sense of confidence, especially with regards to regulation. The previous regime, especially in the U.S., to crypto, it has been perceived by the industry as been overly regulatory in terms of cracking down on even good actors and good companies. What we're seeing right now is with regards to not necessarily a pro-crypto, but I think a presidential regime under Donald Trump that is focusing on deregulation and pro-innovation. I think that bodes very well, not just for Bitcoin, but entire cryptocurrency and digital asset space.
Wei, President-elect Donald Trump has pledged to make the United States the crypto capital of the planet. How significant is this for the global crypto industry, and what does it mean for the Philippines in particular?
Yeah, I think a couple of points. I think for us here in the Philippines, it's actually been really good for those that have invested early into Bitcoin. Coins.ph, we've been around since 2016, 2017. So we have had users on our platform that has owned Bitcoin at the $100 level, $500 level, even $5,000 level. Even over the last 2 years, you could have bought as low as sort of 20,000 to 30,000. So I think Bitcoin is one of those assets that was what I call bottom up investment asset rather than top down. What that means is that it has been one of those assets that individuals around the world have been able to get access into, before what I call, mainstream investors, especially with regards to investors in the Philippines. In terms of big picture wise, what I think what's more important in addition to sort of, making the U.S. the crypto capital, I think what we've seen is actually real legislations that have been put forth by, elected representatives in the U.S. Congress in terms of following what sort of Donald Trump said in terms of creating a Bitcoin strategic reserve in the United States. He has pledged sort of in his campaign to not sell Bitcoin that has been on sort of the balance sheet of the U.S. government. And if the U.S. takes the lead in that, and we see sort of other countries and other global institutions sort of FOMO in, that could provide real fuel for growth for Bitcoin.
Right. It's a very interesting time for this industry, the space that you're in. With Trump's proposed policies, such as creating a national Bitcoin stockpile, that could signal a new era in how governments approach cryptocurrencies. How might this influence the Philippine government's stance on crypto, particularly in the context of national reserves and sovereign wealth fund, perhaps?
Yeah, I think what we're going to see here is that the U.S. is definitely going to take the lead on this. I think there have been other countries rumored to be building up, its own Bitcoin reserve ahead of the U.S. announcements or ahead of policy announcements. I think from the Trump administration. I think with regards to the Philippines, we will to sort of help the government here, whether it's a sovereign wealth fund, whether it's other, not just government institution, but I think, private institutions to sort of get access to Bitcoin and to start adding Bitcoin as part of its own treasury and as part of its own balance sheet.
Now, specifically in the Philippine context, how would you assess our own Bangko Sentral ng Pilipinas' approach to regulating cryptocurrency?
Yeah. Just in context, Philippines is actually one of the earlier countries in terms of coming out with regulation with regards to crypto digital assets in general. And our experience have been sort of for coins, we were the first one to be licensed by the BSP. And my experience here, and I think have put some context in terms of regulation here in the Philippines vis-a-vis the other countries. And as one of the leading players, we'd have to say, BSP has done a very good job in terms of leading the world actually in terms of having crypto regulation and having regulation that is both pro-growth and pro-business.
We were early into this nationally, as you mentioned, but are we keeping at pace with other countries in the ASEAN region in terms of regulation in this industry?
The answer that I have in terms of, working here and then also have been building here is definitely a yes. Within not just an ASEAN context, but I think within a global context as well. There's not that many countries in the world today that have, what I call both clear and transparent and certain policies. I think as a business operating in this sector, what we look for in terms of regulation is one, in terms of transparency, in terms of and clarity, in terms of what the rules are, right? And secondly, in terms of certainty, and the rules that govern our business is going to stay pretty much consistent today as it is, 3 years from now, 5 years from now, 10 years from now, so that we can invest and hire for the business. And Philippines, I think, have had both sort of transparency and clarity in terms of what the laws are with regards to regulation on crypto. And given that we've been regulating in this industry since 2017, there's a lot of certainty that the rules that govern today is going to sort of stay applicable going forward as well. And I'll be honest with you, you can't say that of the U.S. over the last 4 years under the sort of the existing Biden administration. There's both lack of transparency of what the rules are, lack of clarity, and lack of certainty. So I think that's what the industry is looking forward to under the sort of the new administration.
Now, you mentioned, in some instance, lack of clarity. Now, critics argue that crypto markets are mainly driven by animal spirits rather than on economic fundamentals. That said, how sustainable would you say this current rally is? And on another front, how might Philippine investors be able to capitalize on the bullish momentum of crypto?
Yeah, I think just to comment on, I think the way I view crypto is that the internet is finally coming for money. If you look at sort of every single industry that we've been sort of operating and working in, whether it's e-commerce, whether it's transportation, whether it's even travel, right? All of those industries have been disrupted and have been changed in a fundamental way by the internet. And I think one of the last few institutions that the internet is coming after is actually the institution of money, banking and finance. And crypto at the end of the day is just a better technology than sort of the ledger, sort of the balance sheet ledger technology of the last sort of century. And whatever happened going forward, even with regards to Bitcoin, it is a better sort of asset for the balance sheet and treasury management vis-a-vis gold. That's why they call it digital gold. And there's going to be other aspects of crypto and digital assets that's going to disrupt. And I think sort of that's why I think it's good to sort of get in. And I think, as I mentioned before, crypto is a very much a bottoms up asset. It is sort of because of the sort of the pervasive nature of the internet and the global nature of the internet, it is the only asset class that investors around the world can have access to in real time, 24/7, 365, vis-a-vis any other financial assets that you can invest in. And I think from the Philippines, given that Coins does operate and given that BSP, it is a regulated industry by the BSP, investors here can get access to investment assets that anyone anywhere in the world can get access to. And I think for the first time, you have an asset class that the Philippines is not behind the curve on. We're not the sort of the last country in the world that you can buy Apple stock or Google stock but we're actually one of the first countries in the world that you can buy Bitcoin, Ethereum, and Solana in.
Speaking of the global nature of this digital asset, the Philippines' remittances are a critical part of the Philippine economy. How do you see crypto transforming cross-border payments, and what opportunities do you see for this in this space?
Yeah, for anyone that has operated, I think in the global, and not just the global, but sort of the general remittance payment, there's a major pain point in terms of what I call T+1, +2, +3 settlement, which means that when I transact with you, you don't get the money that I pay until 2 or 3 days later, right? And then there's also an issue of processing fee. So anyone uses credit card, they know that whenever you use a Visa or MasterCard, they charge anywhere between 2-3% sort of merchant processing fee. And the same is true sort of in the payment space. I think what crypto has finally allowed for is what I call getting everyone around the world to what I call T+0 settlement, which means that settlement can be instant and the fees are basically as close to zero as possible. And sort of for us, we're about to roll out a couple of different products. One is a peso-backed stablecoin. I think that's something that could be really interesting in terms of putting forth a new payment mechanism, not just sort of domestically, but actually for the remittance. And sort of coins as a whole, we've been working with a lot of remittance companies for almost 5 years now in terms of using cryptocurrency as part of their sort of remittance settlement here within the Philippines. And we've seen clear examples of once you start using US dollar-backed stable coins or other types of digital asset.
Okay. Wei, are you still there?
Okay. You can lower not just.
Wei, we're limited amount of time. We have to wrap up. But one quick question before we wrap up. We're out of time. In the world of cryptocurrencies, what are the bluest of the blue chips? Would that be Bitcoin, Ethereum, and Solana? What are your thoughts on this so investors know what to look out for?
Yeah, I think three currencies that are here to. Three assets that are here to stay are Bitcoin, Ethereum, and Solana. Not financial advice, but personally, I have an allocation to all three in my own personal portfolio. And I think with the elevation of Elon Musk to run the Department of Government Efficiencies, I have a tiny little bit of allocation to Doge as well.
All right. Thank you for your thoughts on that, Wei Zhao, the CEO of Coins.ph. And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Billionario News Channel, always on top.